My most favorite description of India, and I've borrowed this from fund manager and author Ruchir Sharma, who says that India disappoints both optimists and pessimists. I'm sure I have both optimists and pessimists on this panel here this afternoon. And I'd like to introduce them one by one, starting with Rahul, who's the managing director of MRF Limited. Now, MRF is a company almost as old as independent India, maybe even older, I think.
Exactly the same. Yeah.
Exactly the same. It is the country's largest tire manufacturer, headquartered in South India, in a state where the social and demographic indicators probably mimic the developed world. Rahul is here to talk about insights in terms of running a large business in the country, but also to talk to the manufacturing ecosystem, because India has been working hard to boost the share of manufacturing to its GDP. We then have Prabhat Ojha. He's the partner and head of Asia Client Business at Cambridge Associates. Prabhat is a veteran investment banker and asset manager. He's worked across New York, Hong Kong, Tokyo, Singapore, and he will bring to light the perspective of foreign investors as they look at India, both from the point of view of portfolio investments and hopefully even foreign direct investments, if Prabhat can talk to that. It's been an interesting year for India from a foreign investment point of view, so I'm sure Prabhat will have a lot to say. V Rao is the chairman of Tata International Singapore and senior advisor at BCG. Mr. Rao is a veteran. He has worked across industries, across businesses, and he brings to bear insights from India's largest conglomerate, which is the Tata Group. It spans IT services, hospitality, commodities, and is also, I think, a significant manufacturer of Apple iPhones in the country now. So you will get to see or listen to him present a 360-degree view of the Indian economy. And finally, Siddharth Shah, senior partner at Khaitan & Co. Khaitan is one of the country's largest law firms. Siddharth has a finger in almost every large transaction that takes place. He leads the funds practice, so he will also talk to you from an investment perspective, but has also advised clients on joint ventures and M&A. So great perspective on ease of doing business in India. And that is a tricky place or a tricky topic to talk about. So I know Siddharth will bring heft to the conversation. I want to start by talking about what year it has been for India. And from the outside, to many of you, when you read newspaper headlines or visit your news website or Bloomberg, you would probably think this has been a very challenging year for India, right? We've been at the receiving end of US tariffs. 50% is the tariff rate. We've also been at the receiving end of immigration concerns in the US, and so the H-1B visa rule changes impact India's IT services businesses, which are some of the marquee businesses in the country, quite significantly. But that's only half the story. So I'm going to turn to my panel, starting with Mr. Rao, and ask you first, what's the other half? How do you view the year that has been for India and where we stand today as an economy? Currently, the 5th largest economy, some dispute it, saying it's the 4th largest economy and the most populous nation in the world.
Thank you. I'll just pause on this year because it's a small dot or a blip, which I don't take into consideration. Let's take a look at the decade that's gone by us.
Wow.
The 2 decades that have gone by us, India's independence and 75 years of India. The Prime Minister calls it Amrit Kal. Amrit Kal, translated into English, is the nectarian moment of India. And that's an important factor to take into consideration as to why is it so nectarian. There's a confluence of 5 key factors. Very simply put, in my view, factor 1 is, since you mentioned about iPhones, everybody knows what's an operating system which you have to keep resetting on your phones. I won't confirm whether we make or not the Apple, but we do make a lot of iPhones too in Tatas. Operating reset has happened in India. The operating system has undergone a change, and I would let Siddharth talk about it later. 550 laws have been repealed. It's a change forever. It's modernization of laws, from insolvency to labor to investment laws to everything that you can think of. It's a new operating world. The second one is it has had a huge software reset. What I mean by software reset is the kind of digitalization that India has gone through, whether the stack, the backbone of India, which rests on digital today with every citizen having a card and direct credits, it's a huge transformation of sorts. The third is the hardware reset. And when I mean hardware, is basically the infrastructure of India that has gone through a huge step change. There are about 4,500, I think, kilometers of road being put every week. 140 airports, MRTs, the whole country is transforming. That is the hardware reset. But the two other soft resets that India has gone through is the artware of India. And what I mean by artware of India is this political system has learned how to position India better. They've understood the basics of marketing, and they've positioned India in a very rightful and thoughtful and positive manner. Last but not the least is the artware, as they have connected to the people of India in a manner where the country has had a consistency and stability of political system, and they seem to be able to make sense to the people of the country, which is the most important, the most populous country. So when you have a convergence of these 5 factors, I think India is a winning point today. But there are to be guardrails. You need to learn how to do India happen. India has been a paradox for ages, centuries together. It is a paradox, and India will remain to be a paradox. And Indians will be always difficult to be understood. We have 5 of us, we'll have 500 views. So you need to get to what it is. And the typical thing that symbolizes India is what they say, what they mean, what they do. Could be 3 different tracks, yet finally they get to the success. So that's the complexity that you are dealing with. We can talk a lot more about it, but I'll pause here and say this is actually a brilliant time and point to think about India for the world. And that's no reason why last year we've had the highest ever direct foreign investment, about $86 billion into India. This 1 year, since you raised about it, I'll take another 30 seconds on it. I would relatively position it as an operational problem for the whole world, because we're all dealing with Trumpism. It's just not India. It will find a resolution. But look at it in the context. India's foreign trade with the US is 2.4% of India's GDP. You can draw your own conclusion. When you're talking about 100,000 on your visas and for IT engineers and so on, that translates to about $15,000 a month, a year for 6 years. I'm sure the US will absorb part of it, the companies will. I think we'll transcend through this difficult period of 1 year, and I don't think we need to be too disillusioned about the opportunity of India with what US has done for a year. This is part of negotiation, and it is still being negotiated. Thank you.
Well, thank you, Mr. Rao. Very poetic, I must say, and I'm not sure anyone else will have points left to add to this, but I'll try my best. Rahul, and that is a great picture, and in many ways it is, part of the truth. But the other part of the truth is also a variety of different challenges that India faces. So I just give this audience a quick overview from a manufacturer's perspective on what do you think India has already achieved and the key areas that India needs to make progress in.
So I'll just take off from Mr. Rao, and to me, like you mentioned, we're a company which has been in India for the last more than 75 years. And this, frankly, I'm not too clear when people say it's been a tough year for India, because all of us are seeing growth. Maybe it's not a double digit, it's definitely high single digit, so it's not a problem at all for us. And we are very positive on the future. We are doubling down on our capex, and most of my customers are doing the same. So the outlook is very positive, and I think the government has made some very, very fundamental reforms, like and I think the biggest one has been in terms of how they've encouraged infra spending, right? And that's going to be a multiplier effect on demand. So as a company, we are really focusing on how do we make sure we focus on good ROC, make sure capital is invested wisely, and identifying the growth opportunities given these reforms, right? And so we are not looking at or banking on any more reforms, but just making sure that we use the best of the current reforms done by us, by the government so far.
Okay, Prabhat,
Yeah, no, I'll keep to that long-term horizon, which is, our.
First, can you address the year that's been?
Yeah, no.
It's been a challenging year. That's
yeah, which is important to put in context.
Sure.
Where we've been investing, our endowment family office clients have been investing in India for, say, over 3 decades, and over that time, it has been a top-performing sort of market in their portfolios. They've benefited from that compound growth over that long. So that brings us to this year. But just keep in mind that India's allocation in either global indices or emerging market indices has also grown very significantly over time. So, global investors, just by being invested through those benchmarks, have had a significant increase in their Indian exposure during that time. Now, at one point last year, India was larger than China in the MSCI EM index, and it is today about 17, 18%. So while the last year is one part of the story, yes, there has been a rotation on the FPI side out of India, but you got to put that in context. There has been a significant increase in exposure to India just being passively invested. But what are we seeing with our Indian managers? That they are still continuing to find great companies who they expect will continue to grow at 20-25%. And so yes, 1 year is a challenge, but if you kind of look at that long-term both returns as well as you kind of think about that long-term horizon of our investors, that's how you should put that in context. The other important aspect is, historically, India has been about growth, either public equity, PE, VC, and that's what investors were seeking, and that's what they could access. But with all the reforms and the capital markets, now it is more a multi-asset approach to India. You have infra investment opportunities. You have reforms from IBC which allow higher recovery rates, quick recovery, so private credit is taken off. The capital markets have deepened structurally. I mean, options, futures, which allow investors to get different types of alpha, different types of beta from India. So that deepening is now what we are seeing our investors kind of look towards India, which is like, okay, there's that growth. You still sort of want to access that innovation in PE, VC, and public equity, but now there are other ways to sort of invest in India as well.
Okay. We have three optimists. I'm hoping Siddharth will bring some lawyerly skepticism to the conversation.
I think
the year so far, and then we'll come back to some of the key challenges.
So maybe I'll keep it pretty short, and in some way maybe we'll try to bring in some perspective which probably balances out of view. But to tell me, I think definitely the way I see it, far more optimistic environment, and maybe it's India has always been a country of paradox, right? So if you really look at it from an external world, all of these changes that you mentioned about whether it's immigration, tariffs, all of it, obviously paints a very kind of gloomy picture to start with, but maybe these are all very short-term impact, and what we see on the ground in terms of capex cycle for Indian businesses, I mean, it's kind of kick-started, and we are seeing so much more optimism on that. If you really look about capital flows, FDI, I think we've been consistently amongst the highest receiver, and I think you're seeing that capital actually getting deployed, and also the exits. So while you may see the outflow in a negative light to say that we are losing a foreign investment, it's really about India is no longer just a capital for destination. You are really seeing investors making return, and they take it out, and it's only going to build more in confidence. So the depth of the markets, the way we have seen how the domestic consumption trend, I think if you really look at inbound, the GST 2.0, you suddenly see a very significant kind of growth on the consumption side, and it's starting to show. So I think I would say, yes, you got to be mindful that India is always maybe complex from outside. You definitely need to invest your time and effort in knowing India, but then you have to be there for the longer term. I think you definitely, and most have made money on that.
Okay, fine. So we've got opening comments in. I'm going to put to my panelists four key challenges that India is facing. And remember, every challenge is also an opportunity, right? Because if you are able to overcome the challenge, you're able to unleash even more growth. I'll start with you, Siddharth. I think India has been a country that has been liberalizing and reforming right from the 90s. Sometimes the pace has been quick, sometimes it has been slow. My concern really is that maybe all the low-hanging reform, and I'm not suggesting it was easy to do, but it was relatively easier to do, is all done and over with. Whether it's the bankruptcy law or whether it's a consumption tax in the form of the goods and services tax, and so many more other such changes. With that done, what do you think is left on the table to do that investors want seen done? And is it going to be easy to do? Is there any political appetite in the country? For instance, yes, we've done land, but land is a center and state issue. And so land, I think some changes in the model law by the center have been made, but it hasn't yet been notified. It's not yet effective, right? So factor reforms have been a sticky area. What's left to do?
So I think clearly, I think the reforms, the low-hanging fruits, like opening up of sectors, kind of to channelize more FDI, I think a lot of those may have gone now because obviously we are open. I mean, most sectors are today open for foreign investment, 100% automatic, barring maybe a few sensitive sectors. And then that obviously means that for India to attract more FDI, you obviously need to look at more structural reforms. And then I think that phase of structural reforms is already underway. So maybe we will see whether it's digitization, and I'm talking about digitization of in terms of creating the public infrastructure, digital public infrastructure. I think we're starting to see that pay out in terms of the entire stack, whether it's about Aadhaar, whether it's talking about the payment systems. I think where we need to see is really the courts, right? So I think the biggest
Judiciary.
risk and judiciary, right? So I think a lot has been invested. Obviously, a lot more needs to happen there. I don't know, just to put some statistics, almost 5.2 billion pages of legal judgments, orders, all of these have been digitized. And then really we are kind of created a base where you will start seeing e-filings, e-hearings, and all of that. And I think that's really the phase that we are going to see. Obviously, and we've got the basic infrastructure in place. So I think digitization phase 2 or phase 3 is really where we'll start. And then that's something which I believe will build a lot more confidence, because the enforceability of contract, if you really look at it as a risk, I think it has been always talked about when it comes to India.
Sure.
And that, I think, is where one needs to be mindful. Even on IBC, I mean, I think today...
Which is the bankruptcy code.
The bankruptcy, insolvency and bankruptcy
familiar with the
code.
acronym. Yeah.
I mean, today we're talking about credit as an asset class, has been one of the fastest growing asset class. All of that on the back of the insolvency and bankruptcy code, which was introduced in 2016. More than 8,500 resolutions, close to about 1,200 resolved already, large cases. And I think close to about $320 billion of debt resolved. So obviously a great start, and has created an asset class which we are seeing the growth on. What needs to be done, because you still have gaps. I mean, today, consistency of interpretation of IBC, like what is targeted is 330 days of a resolution period, is what the law talks about. What's on the ground is close to 800 plus days on an average. Now, obviously, it's not just about the law itself, with all the cross-stakeholder litigation, interpretation issues. So I think some of these need to be ironed out. We have a bill to further kind of streamline the IBC process coming up, the amendment bill, and probably with cross-border insolvency issues, out-of-court kind of arrangement with the creditors to kind of bring in the resolution. I think a lot of that will definitely, and that's what I think India should be really focusing on as reforms going forward. And we'll see definitely that brings a lot more confidence.
Okay. Does anyone on the panel have a quick thought to add to what's left in the reform process that investors would be looking for?
Well, lots been done and lots is left. Because this is a fact of life. Because if you're in international business, look at ASEAN.
Are you happy with the pace or the progress?
Pace of the progress has been excellent given India's challenges of 28 countries, number of states, number of state governments, the provincial governments, the laws. I think the amount of work that has happened and change that has happened, and I'm seeing it for the last 31 years from Singapore, I'm more than impressed, and I could have never believed that so much of progress would have been achieved. Having said that, let me give you a perspective. If you're in global business and we are talking to investors who are looking at the entire globe, look at ASEAN. ASEAN doesn't have a common code for corporate law today. Each country has its own corporate laws. There's been a lot of effort to harmonize, synthesize, and make them common. Similar problems exist in India. So one takeaway from all this is, when you go to India, you see the Prime Minister giving bear hugs. You might get a hug, maybe a kiss too, but after that you must be ready for the pinpricks of the reality of the ground and the yards that you need to do in a country. I always tell my friends, before you invest in India, your money, invest your time and effort to understand a complex country. I won't want to simplify.
That's not a very good sales pitch, I must say.
Because if you don't invest in travel.
My concern is, and Prabhat, please come in here, if the effort taken to invest outdoes any potential return that you can get from the country, and the topic of return is an argumentative one, if I can put it that way, then that's not the best pitch a country can make to investors, right?
Can I just make one comment, which is a quote from a leading economist who's from America, who said, if you want to make an investment, China is the best place. If you want a return on investment, go to India. He said it about 15 years ago. Thank you.
All right, Prabhat, would you agree?
Well,
Don't give me a
three-decade
time frame for returns. That's not going to be easy to sell to this crowd, right?
Yeah. No, I would say that India, you do want to have a longer term horizon. Again, I will go back to that because that's how we think about our investments. But to KV's point about partnerships, we invest through fund managers. We invest through investment partners. And selecting and choosing them is an important part of our job for our clients. And I agree with what was just said, which is finding that aligned partner as you sort of invest in India is an important element of how people should be investing in India, thinking about, a culture that builds in an asset manager, of being long-term focused, being not just passively investing, but having that local insight. As global investors, as you kind of go to India, yes, now you can invest passively, which is also a sea change. But as you kind of look for investment partners, or corporates going in to look for JV partners, it's absolutely important to identify the right partner. And you would agree with that, which is, that makes a big difference, and you got to walk carefully as you do that.
Okay, so then let me cross-question that in two ways. One is then maybe demystify for this audience, again, who looks at the headline that, I think this year itself we've seen a close to 18 to $20 billion outflow by foreign portfolio investors. Now, the flip side to that is a structural shift in domestic savings, which has meant that so many more Indian families and households are channeling money towards equity investments.
Yep.
And they have helped hold up the equity market, so to speak. Yet, why are foreign portfolio investors leaving India, as that's what it seems? And what needs to change to keep them back?
Yeah. So again, I think I'll go back to what I said, which is while the FPI flows might go in and out of India, but the bottom line is that over 5-10-year periods, actually the investments they have had in India has gone up significantly just because Indians' weight in the indices is so much higher today. So, yes, India currently trades at 30-40% sort of premium to its own valuations, and that, might be a concern as to why investors are maybe reallocating to China. Like I said, Indian weight in the EM index was at one point bigger than China's. and China did get attractive. So a rotation over a 1-year period to right-size their exposures is not a surprise. But at the same time, when we look at our fund manager partners who want to think long-term, who want to think quality, who want to think sustainability, you go look at any sustainability-focused manager or quality-focused manager investing across EM or across Asia ex-Japan, India is still one of the, if not the largest allocation, still top 2 or 3 allocation for them. So yes, there is a bit of rotation, and as you know, that kind of goes in and out. But that is the context, which is India did get very high, and it did get a little expensive. So rotation out of that is not a surprise.
Okay, what needs to be done to sort of increase flows into the country? Is there anything local that needs to change, or is what we're witnessing right now a set of global trends where emerging markets have been out of favor for a while because the US is the big elephant in the room, right?
Yep. So, with that dollar weakening, EM is coming into focus. It has underperformed the developed markets, particularly the US. So as money flows back into EM and this rebalancing sort of happens, I think what needs to happen is Indian companies need to grow into their earnings, grow into their valuations through their earnings, and that should help bring back more confidence.
Lower valuations.
Or if you grow
More
your
selling
earnings,
that
yes,
means-
correct, yeah.
Or grow your earnings.
Yes.
Okay, is that going to happen, Rahul? Mr. Rao, I'll come to you in just a bit, but is that going to happen? Do you see corporate India growing its earnings over the course of the next year or two? I know you probably don't want to comment on stock prices as the managing director of a company, but yet I think the expectation of investors is benchmarked to where prices are, and earnings have yet lagged that.
I'm fully convinced that earnings will go up without a doubt. And you have a mix of companies. The stronger firms, without doubt, will increase earnings, and you'll see EPS going up, and PEs becoming far more favorable, for sure.
Okay, I want to talk to you about manufacturing and innovation. One common refrain about India from the outside is that we are a labor cost arbitrage country, and that whilst we've made great progress in manufacturing, especially in the last few years, adding significant capacities in electronics, in iPhones, as I mentioned, we've still not been able to considerably move the needle when it comes to manufacturing as a share of GDP. That's one. And the second refrain is that India is not necessarily a country of deep innovation yet. There are pockets of innovation. We have the world's most advanced and most frugal space program, but it hasn't necessarily filtered through. We don't have Indian brands in the manufacturing space that are well recognized, even though in the services space we have TCS, Infosys, etc. How would you respond to both of these?
Two things. I think we can't label entire industry as cost plus or innovation. But I have to say that over the last 5 to 6 years, we've seen many companies who have really become very innovative. If you look at the entire auto space, what you've seen in the EV industry, both cars and two-wheelers is exceptional, right? And when I talk to companies, their objective is we want to be the best in the world in what we do. It's no longer cost. It's pure product performance. And we don't believe in now benchmarking the West. We want to do things differently and have different processes to make the best product, right? And in my view, there are 3 things we look at. If you want to be the best in innovation, one, you have to invest in the R&D infrastructure to allow your engineers to experiment and get rapid feedback fast. And second is you have to allow engineers to really try stuff which has a high probability of failure, right? And a lot of companies are encouraging failure. And when you do that, that's when you really get to innovation, because you learn through the failures. And a lot of companies now are investing a lot in R&D, and with our engineering expertise, I'm very confident that you'll see many companies really coming out with really innovative products. And I don't think we're looking at us as a company, we don't. And many of my customers I talk to, we don't look at ourselves as cost plus now. It's pure innovation, and our products have to be the best in the world, and no matter who they are. They could be the leaders in the US or anywhere else, but we have to make products better than them, and we are working towards that.
Okay, Mr. Rao, how long do you estimate it will take for India manufacturing to, sort of be on the world map?
I disagree that it's not on the world map.
Okay.
Firstly, and I contest a couple of the assumptions which have been presented.
All right.
Because these are not driven by data or the fundamentals. First, on investment, there are two kinds of investment flows. One is investment where you do a productive function in India, which is direct investment, FDI. The other is the money that comes into public markets, private markets sometimes, which is a short-term financial play, which is also called in economics, in other words, as hot money. It comes and goes. I don't think there should be any policy to welcome that or not welcome it. It is a free movement that comes and goes based on various cycles of it, and I will not be unduly concerned about it. I'm concerned about the investment that comes and stays. So there's a perspective on that. The second is India had a manufacturing background, and I come from a group which is 157 years, and we pivoted from making soaps, chemicals, salt, to aircrafts, to semiconductors, to electronics. And when you talk about China +1, +2, +3, the +1 comes straight away to India, and there's no country which could have risen up in such speed, such scale. For a iPhone factory or for electronics, you need about 60, 70, 80,000 engineers. India produces 1.43 million engineers. Vietnam, you can get a place, but you can't get the capacity of people, you can't get the talent. So all the production elements that have come into India are phenomenal. Today, aircrafts, Airbus is making aircrafts there. Advanced manufacturing is big. If you look at the EV models of India, electric vehicles, the number of vehicles that have come up can compete with anybody else in the world. So manufacturing is happening. But if you ask me at what speed, at what scale, surely we are behind China. There's no doubt about it. China has had several years, I think, advantage over it. And the third dimension that we must bear in mind is India is essentially a domestic market. Indian manufacturing is addressing 450 million middle classes which are growing, and Indian brands are more than established, and even foreign brands are not able to unseat those good Indian brands, one of which I belong to, but I'm not only talking about that, but many other Indian brands which are, for instance, MRF on tires or so on and so forth, are all very preferred brands. It's not an externally driven economy. The other perspective, when you brought about US trade as a part of India is about 17.5%, out of which 2/3 is your goods exports, which is about 10 billion, adds up to about 72 billion or so. And then the 40% is your services exports. If you look at the total India's export economy as a part of your total GDP, is still not an export-driven economy, which shows the scope that India has for growth internationally. That's the journey to take forward.
How long will that scope? Because we've discussed potential for many years now. So are we at a pivot point? Are we at a point where some of this seems nearer, than it did, let's say, 2 or 5 years ago? You spoke of semiconductors. There is a production
These are export
incentive
items,
program. Yes.
So to give you an example, I'll give you that example. They've taken a 2030 target of 32 billion exports of mobile phones from India. They've already done about $6 or $7 billion, which was non-existent about 3 or 4 years. That's good speed. But are you saying, is there a magic wand in a democracy of a nation of India's size and diversity and opinions? It's very difficult to get that kind of a speed. Even in a command economy, it does not happen. It takes time to build. But I think India is set to grow. And as I said, it has to become a global economy, and it is working towards it. And I think that's the best time for global corporations to be in India and actually push the envelope in some way and be a part of the journey of growth.
Sure. Okay, the final and the fourth issue that I wanted to... Yes,
jump in
please,
there
go
one,
ahead. Yes.
Menaka? I mean, yes, manufacturing is important and should be a focus, but, global trade in goods has actually been declining, right? And everybody wants to be that manufacturing. Now, you did mention it, which is actually global trade in services has been increasing much faster than manufacturing. And, I was at an event in Bangalore, and this leading banker stands up and says that my office in Bangalore today or in India today is bigger than what we have in New York. Right? And this is a leading investment bank. So that GCCs, the research, the R&D that's going on at these centers, that could be the engine. Yes, manufacturing needs to be developed, but without talking about how services is an important piece of the India growth story, I think it kind of misses the point.
That's a very good point. I think the global capability center boom that we've seen in India, that has brought with it, I think, significant collateral benefits as well, right? In fact, in terms of either the real estate, value appreciation we've seen in key urban areas across the country, both in the south and in the west, or employment benefits. So yes, I think the Global Capability Center boom is a great one to talk about, but it's very difficult to actually quantify or invest in because this is all very privately owned right now, right, Prabhat?
Sure.
So is there a play? If investors in this room wanted to know what is the best way to make it or take advantage of this one big, fast-growing area in India, what would you say to them?
Well, I will add that we are talking about AI, we are talking about innovation. There was a panel yesterday. Look, all that infrastructure that has been built on the AI side is now being offered to Indian consumers, either free if you're an Airtel subscriber or at $5,
yeah.
which I think will be a great sort of growth story for innovation on the services sector. How do you sort of invest in that? Again, you will have to partner with an Indian on-the-ground manager to kind of invest in associated services around it, around the growth in the urban centers, how it is kind of spreading around the cities. That's how you'd sort of play it. It could be infra, it could be real estate. So there are many ways to kind of play the associated growth with that.
Okay. The fourth element I wanted to talk about was leadership. Many of you know that India has several family-owned businesses. Many of these are very old, like the Tata, but many are also founded by entrepreneurs that took advantage of the post-liberalization period. Today, they are handing over to their successors, like in many other parts of Asia. And I think there was one statistic that stood out to me that was interesting. Only 7% of Indian heirs felt obligated to join the family business, said an HSBC survey. Now, there is a good side to this story as well, which is that many of them are preferring to take their family wealth and invest it in the startup ecosystem or back other entrepreneurs. So I'd love to hear from you. I'd like to give Siddharth a chance to speak. Siddharth, what do you make of this transition we're seeing in leadership and both the benefits and disadvantages of it?
Sure. And probably as a firm which has been in existence for almost 115 years, and having worked with businesses across multiple generations, I think this question about whether the new generation and then is it ready? Are there enough takers for that opportunity? I think we need to recognize that this generation is definitely different from their prior generation in terms of their assessment of business risk, their way of kind of looking at business, monetizing the business. I think a lot of it is different, but does it mean that it leaves any void? Probably not. I think their approach to business is probably different in terms of not looking at kind of a gut feel business decisions. They are far more measured, a lot more institutional capital kind of backing them. And that's probably where I think you're starting to see a lot of them running the business with a lot more institutional, better governance, more accountability than probably what you may have seen. So the way we are seeing this as a phase of transition for Indian businesses, driven a lot by a very different leadership structure. And then I think where you see the younger generations with a very different hunger. And then obviously the second aspect of it, they're looking at businesses as portfolios and not like the only crown jewel that they would want to invest in. So that kind of gives them a much wider kind of perspective to really build on. And then I think that's reflecting across multiple generations. And I think whether it's a risk that we may not have takers for all the traditional businesses to kind of take it to the next phase, I think we have great
It's driving
institutional
great,
capital.
but it's also driving great M&A activity for firms like yours,
Exactly.
right?
I mean, it's an opportunity if you really look at it from to businesses to kind of take it. And we have no dearth of private institutional capital, smart capital, kind of willing to come in, either back the new leaders or really buyouts. You see the number of buyout deals in India. A clear indicator that the businesses are ready and the owners are ready to kind of really hand it over to someone who's the next best person to drive it. And I think that's something, the way we think leadership is definitely, yeah.
Rahul, you're thick in the middle of this.
Yeah, so I'm the third generation, and our business is close to 80 years. And the way I see it is, we are more custodians of a legacy, right? And our objective right now is not to go for big bang acquisitions, but it's really to step back and see how to reinvent the business to make sure it's really world class and you can be the best in the world. So it could be making sure the structures are in place to have great innovation, making sure our quality systems are the best in class, building the marketing muscle to identify growth opportunities. It's stuff like that. It's not going to be major acquisitions or levering up with debt to do something crazy, but it's really looking at building a very solid foundation so you create an institution which can last for a long time and take on the best in the world. And it's hard work. And across the board, when I talk to other businesses, I see the similar mindset. So you'll see a lot of companies really trying to become very strong, and they are benchmarking nothing but the best in the world. And that's the way we look at building a sustainable long-term business.
All right, we've got 3 minutes left.
I
on
think
this
you
panel.
did
Yes,
say
go ahead.
that, which is, it's not surprising. We see that happen in China as well.
Of course.
Next gen wants to do different things. But slightly different in India is just the managerial talent. You see them do very well running global companies. That is also available within India. They've been trained with these MNCs. And many of the private equity shops that we sort of work with, and they sort of bring in this new management, that talent base, which also works very well with global companies, is actually something, a strong factor in what could drive the growth in India.
All
It's
right,
the
great.
transition.
We've got exactly 2 minutes left, so 30 seconds to each panelist for quick takeaway comments, final comments. If this is a room full of investors looking to invest in India, what's the message you would like to send them? Rahul, do you want to go first?
I think it's a very positive story. And to me, you asked me what the most exciting thing about India is I see a lot of states in India like Uttar Pradesh, Bihar, and Orissa, which for those of you who don't know India, these states have a population between them of around 350 million people. And they never contributed to India's growth before. But now with the huge infra spending, you're going to see these states now being part of India's growth story. And that's going to be, I think, the next frontier for India's growth. And I'm seeing real action on the ground. And that to me is very, very exciting. And that's really going to make India a very exciting place when they start contributing to our growth as well.
All right. Prabhat?
Yeah, I will say that go find some very good investors. I will stick with that, which is, either stock pickers, operators, PE, VC. That's how you access the growth in India.
All right. I'll come to you for the last word, Mr. Rao. So I'll give Siddharth the second last word here.
Okay. So, I think, again, India is probably a market which you probably need to invest, and it's not a market that you probably want to evaluate from a 10,000 feet view. So I think if you really look at how people who have succeeded, foreign investors who succeeded, really by engaging, being on the ground, getting the right partners, getting the right advisors, and then probably staying invested. I think you'll see a lot of noise and probably a lot of clutter from outside. But I guess if you're on the ground, I think you'll always see a lot of opportunities, and then there are always challenges, but there are always solutions. India is always known to be a very solution-driven, whether it's advisors, whether these are businesses, you'll always find. So please don't get discouraged by hearing the noise, but you rather go the right way, and then you'll find the opportunity there.
All right. Mr. Rao, take it away.
India is the right time, right place. Take a flight. Go there. And the last word I can give you is doing India is like riding a tiger. Don't run behind it. Don't keep watching it. It'll keep moving. Once you jump on it, be ready for the ride. And the returns will be rich. Be there, do it. Thank you.
There's no way I can beat that. Thank you for being in the room this afternoon. And thank you to all our panelists for their insightful comments. Shall we? Thank you.
Thank you.
Thank you.